The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Hello and welcome to Squawk Box Europe. I'm Karen Cho with Steve Sedgwick and Juliana Tattelbaum. These are your headlines today. Shares in China's CATL jump in their Hong Kong debut, with the EV battery giant completing the world's largest IPO this year.
Elsewhere, the Brexit reset. UK Prime Minister Keir Starmer ushers in a new era, unveiling his third major deal this month, aiming to put Britain back on the world stage, despite some criticism at home.
We're turning a page. We're opening a new chapter in our unique relationship. This is the story of historical and natural partners standing side by side on the global stage.
And JP Morgan Chase CEO Jamie Dimon warns markets and central banks are failing to recognize the risks amid a record U.S. deficit, tariffs, and international tensions.
My own view is where people feel pretty good because you haven't seen an effect of tariffs. The market came down 10%, it's back up 10%. I think that's an extraordinary amount of complacency.
Morning all, morning all. Yes, Mr. Dimon, absolutely an extraordinary amount of complacency, but that's the story of markets, I've guessed, throughout my entire career since the late 80s. How are you both?
Until everyone's fearful, that said, and they're running in the opposite direction.
Don't get me on it. That's why I was so uninspired by the downgrade from the ratings agency yesterday. I've been talking about debt for my entire career. Anyway, we've got to move on because we've got really exciting news. Well, I don't think it's complacency. I think this is a really positive story. Shares of CATL are sharply higher in Hong Kong, where the battery manufacturer is making its debut this morning. According to a company filing, the public offering raised $4.6 billion. I think there's an option for more as well. The largest global listing so far this year. Emily, this is a great shot in the arm for the markets. A very good morning to you.
A very good morning to you, and a stunning debut for Contemporary Amprex and the world's biggest IPO landing here in the Hong Kong market today. The shares were priced at 263 Hong Kong dollars per share, helping the company to raise 4.6 billion. And if the over-allotment green shoe is exercised, that could send the funds raised north of $5 billion. They are going to be using those funds towards building out a battery factory over in Hungary. You're looking at the listing ceremony earlier this morning, and it really was the who's who in the finance world. The financial secretary was there, the head of the stock exchange, the chairman, as well as the CEO. Even the mayor of Ningde was there, which is where Contemporary Amprex is based. So with this, the $4.6 billion, they're going to be building out a battery factory over in Hungary. And we got a chance to hear from Robin Zhang. This is the chairman and founder of the company, who was the one on the right side of the gong that was striking it there. You could see him with the mallet. And he says that today's listing is the integration into the global capital markets. That Contemporary Amprex is not only a battery maker, it is a zero carbon solution company. They say that the transport market will explode with growth, and that the ecosystem is battery making, battery changing, as well as battery recycling. Bonnie Chan, CEO of Hong Kong Exchanges and Clearing, talks about the biggest listing in the world happening in the Hong Kong market, and it proves that the city here is a great platform for IPOs and for new capital raisings. She indicated that there are 150 companies in the pipeline, and 40 of them are A-share companies waiting to come to Hong Kong. Now, as I mentioned, A-shares, typically we see the A-share listing trade at a premium to the H-share or Hong Kong listing. And it is quite the difference here today for Contemporary Amprex shares. CATL Hong Kong listed shares are traded at a premium to of its Shenzhen traded price. We're looking at a 17% pop. The shares opened higher by about 12% and then have just really further gained to momentum as the session has progressed. We've got about 2 2 hours left in the trading session today. Of course, this listing comes to market at a time when we saw a thawing or a de-escalation of the trade tariffs between China and the United States. But given that Contemporary Amprex has minimal exposure to the U.S. market, analysts are very bullish on this stock. And we are looking at the Contemporary Amprex China A share listing at 262 and change, and a nice 17% pop for the Hong Kong listed shares, and a very strong debut into the Hong Kong market today. Back to you guys.
Brilliant primer for us, Emily. Lovely to see you. Thank you very much indeed for that. Well, Juliana, Karen, look, I was eulogising about this company. This company is nailing it at the moment. It is supplying not just the Chinese manufacturers. This is one that can actually unlock the door, potentially, for one of the biggest problems that people like me as a consumer have. I have many problems. Obviously, the viewers know that by now. But I will not buy an EV until I can charge the thing quickly and I can overcome my range anxiety. The third reason is I think they're overpriced still compared with ICE engines, but that's another issue. And BYD and others seem to be solving that. But this one is talking about enormous charges in terms of 400 or 500 kilometre charges in such a short period of time. And we see so many companies that come to the market and pop 20, 30, 40% on debut. I'm like, why? This company hasn't made a bean. It hasn't got a business model to making a bean. I think this is the complete opposite.
It's not just the car market either. They're looking into the heavy truck market, where effectively there would be a battery swap solution, which we know is really important for these large trucks that are hauling cargo, to be able to quickly stop if they're on some sort
jump
of
in there?
time, pressure, that they can swap the battery and then continue on.
Yes. Battery swap would have been such a brilliant. Do you know, about 15 years ago, there was a guy called Shai Agassi, S-H-A-I Agassi, who came on. And I did a load of pieces, long pieces with him. We did a lot of study of what his business model was. And he was working with Renault, and he's working with, I think, the Israeli state and others as well, and the Danish state as well. And he had a battery swap technology, and it seems so obvious. Have a ubiquitous battery that can go in and out of every car, where you just pop along to the petrol station, pop up your hood, take one battery out, put another battery in. But it never gained the traction, and it seems such a genius idea, because all the different car manufacturers wanted their own standard. They didn't want to go with this ubiquitous form. And I think what a brilliant idea it was. So if there is a battery swap, it makes so much sense.
Well, this is in the works in terms of heavy vehicles, heavy trucks for the Chinese market. Juliana?
Yeah. I think when it comes to this particular IPO, I mean, looking at the analyst reaction, it seems like it's been priced in an incredibly attractive way. 17 times earnings to get access to what you say, Steve, is the most innovative when it comes to battery technology. It's a pretty decent price if you want to get involved here.
And yet it's a very fast-moving space. We've got another expert for you. Tu Li is the founder and managing director of Sino Auto Insights. Tu Li, thank you very much indeed, sir, for joining us today. Look, we've talked about some of the positivity around this stock. I want you to be more balanced, actually. What are the risks to this company? Because there are some political risks out there as well, aren't there?
There are quite a few. But what we're seeing is that CATL is committing completely to the European market, investing $7 billion, over $7 billion, to build a 100 gigawatt hour factory battery plant there. Now, they also have partnerships in place with GM and Ford in the United States, and that's where the risk is that you're referring to. So although they have global expansion plans, the United States is on hold for now for them.
What we heard today was that the funds would be used for building out a factory in Hungary. And we know that other big companies like BYD also pivoting in that direction in Europe. What do you make of the build out in a place like Hungary, which of course is a stepping stone to big European markets? Does that spell a much stronger presence in Europe?
Oh, without a doubt. And, with BYD also building manufacturing in Europe, I could see both the EV makers as well as the battery makers, the BYDs and CATLs, building strong presence in Europe and being major players there within a short period of time.
Let me ask you about the technology itself. CATL claimed that its latest battery offers 320 miles of charge on just 5 minutes on the charging station. 320 miles of range, with just 5 minutes on the charging station. What's made them so successful at innovation?
So they're investing heavily in R&D, continuing to invest heavily in R&D, number one. Number two, they have the advantage of scale. They're the largest battery manufacturer in the world, obviously with 38% market share, but also they are working with most major automakers, which really gives them access to a lot of different technology within the OEMs as well. So they kind of have all the advantages right now because they're working with the Chinese EV makers as well as the legacy automakers.
Is there anybody else in the peer group that has that advantage of sort of getting to see the best of both the Chinese and the Western companies in terms of what they have to offer?
Well, what we're seeing is because of the ultra competitiveness in the China market, the price war in particular, we're seeing the BYDs and the CATLs push each other. We saw BYD during the Shanghai Auto Show show off the megawatt charger or the mega charger. And so they're really that's why a lot of that innovation is happening, because the competition in China is so intense.
I wanted to ask you about the truck ambitions through this subsidiary, because what we've heard from CATL is effectively they're working with a dozen heavy truck, terminal, tractor and heavy equipment manufacturers to develop about 30 battery swap-enabled EVs at this point. What is the potential in that area of the market to try and not just build its share in cars, but also in heavy industry?
So swapping actually lends well to commercial trucking more so than passenger vehicles, because with passenger vehicles, there's a certain amount of unpredictability. But with commercial vehicles, it's a little more predictable where they're going to go, how far they got it to drive. And so there's a huge potential there. But it's also going to take a large investment to build out these swapping stations and then determine who's going to hold on to those batteries on their balance sheet. So,
yeah, that's a good point. Just tell me a little bit about the valuation. All right, we've said a lot of lovely things about this company. It's got a great position at the moment, but it's stunningly competitive at market out there as well. Are you happy with the valuation now? It's had this 17% pop.
Yeah, I think there's still a ton of opportunity and upside. There's still only 50% take rate in China. Now the growth is going to level off a little bit. And so that's why we're seeing the CATLs invest heavily into the international markets. And I think they're going to use Hungary as that beachhead for supplying Europe and parts of Africa, because 100 gigawatt hours is actually quite significant for Europe for now. So,
can I ask you about some of the pressures here when it comes to being on entity lists? Because effectively we've still got CATL being placed on the US Department of Defense list in January. The company's been working to try to get off that list. Is that an inhibiting factor for seeing more breadth in terms of shareholding, particularly, say, from American investors?
Oh, without question. The US market is still the second largest passenger vehicle market in the world, number one. And number two, the US capital markets are the largest as well. So I see it as a constraint. I don't see it as something that's going to stop any of their growth or international expansion. I think it's an opportunity that they'll try to revisit and work with the U.S. government on. But they're quite a machine right now in the battery space. So.
We talk a lot about CATL, we talk a lot about BYD when it comes to the Chinese in this space, but there are actually a lot of Chinese EV makers making waves in China. What other companies should investors keep on their radar right now?
So there's a company called Goshen that is invested in by Volkswagen, Calb. Calb has a factory in South Carolina, I believe. And so outside of the Japanese and Koreans, those are just two. There's Eve Energy. Of the top 10, I think the Chinese are 5 or 6 or 7 of the top 10. And but let's make sure we understand the scale here, because at 38%, BYD is around 15 to 17%. So those two companies alone take up over 50% market share in the global battery space for EVs.
Tuli, really appreciate you joining us this morning all the way from Michigan. Thanks for either staying up late or waking up early for us. Founder and Managing Director, Sino Auto Insights. China's central bank has cut its key lending rates by 10 basis points for the first time since October. The PBOC reduced the one-year loan prime rate to 3% and the 5-year LPR to 3.5% as a cooling in trade tensions and a stronger yuan allowed for an easing in monetary policy.
The RBA has cut rates by 25 basis points to a two-year low, with the central bank in Australia pointing to cooler domestic inflation and a diminished global outlook. The market had fully expected a cut, with some predicting a half-a-point move. The RBA warned of uncertainty ahead, particularly with changing trade policy, saying it remains cautious around the outlook.
So, as you know, ladies, I was at Lancaster House yesterday, and there was a lot of reporters there, and there was a dozen plus TV crews, and I happened to be next to one of the, how can I put it, more right-wing crews. And as the Prime Minister walked up, you can't make this rubbish up. As the Prime Minister walked up, this reporter from this pretty right-wing, I think we're pretty middle, we're not left, we're not right, we just kind of talk business news. Anyway, this reporter was shouting out to the Prime Minister, because the Prime Minister wasn't going to answer any questions.
Shouting over the top with you, number one.
Difficult. And he was shouting, well, what about the fish, Prime Minister? I'm shouting like he did. Have you betrayed the fish? Have you betrayed the fish? And he kept going, and he was live on air. And I'm like, really, mate? And you know you are. Okay. Have you betrayed the fish, Prime Minister? Have you betrayed them? And I'm like, mate, the fish don't care. They don't care if they're British or European. They don't care if they've got a blue or red passport. It's the fishermen and fisherwomen you've got to worry about.
Have you betrayed Nemo and Dory?
The fish don't care.
The two most famous
genuinely don't care if they're caught by the Spanish or the British. What a muppet. Anyway, Britain and the EU unveiled the broad strokes of their biggest realignment since Brexit on Monday, with commitments to pursue targets topping the agenda rather than immediate action. Agreements covered areas ranging from energy to migration to the politically contentious topic of fisheries. Which is a serious topic, but I think he got his question wrong somehow. Anyway, in a concord, I like that word, that UK Prime Minister Keir Starmer says could be worth £9 billion. I think that's £9 billion a year, he said, actually, by 2040 to the United Kingdom. Anyway, leaders from both sides of the channel hailed the deal.
This is the first UK-EU summit. It marks a new era in our relationship. And this deal is a win-win. It delivers what the British public voted for last year. It gives us unprecedented access to the EU market, the best of any country outside of the EU or EFTA.
We're turning a page. We're opening a new chapter in our unique relationship. This is the story of historical and natural partners standing side by side on the global stage, facing most of the same challenges, pursuing the same objectives, like-minded, sharing the same values.
You succeeded, we all succeeded. Over the past months, we have worked tirelessly to rebuild trust.
Coming up on the show, the EU downgrades its growth forecast for this year. We'll take a closer look at the expectations next. Plus, we'll focus on gold as U.S. recession fears spike demand for the precious metal. And we'll discuss investments in Central Europe as well as Asia in our exclusive interview with the incoming co-CEO of PPF. Don't miss that conversation at 8:30 BST. Welcome back to Squawk Box Europe. Yesterday was a choppy day for Wall Street. If you were trading equities, you'll know that we saw a sell-off at the start of trade yesterday as Treasury yields rose in response to that Moody's downgrade, which came after the close on Friday. But sentiment turned more positive throughout the day, and we ultimately saw the main indices end the day flat. From an equity perspective, the Dow Jones ending about 0.3% higher, and the S&P and the Nasdaq ending essentially flat. It was the healthcare sector that outperformed yesterday, gaining about 1%, while energy stocks lagged, closing down by about 1.6%. In terms of trade overnight in Asia, we are seeing equities move mostly higher, with the exception of the Japanese market. The Nikkei 225 trading down by about 6 basis points or so. Decent gains in Hong Kong, where all eyes are on CATL after their listing, as we were just discussing at the start of the program. The Hang Seng Index up about 1.6%. Shanghai Composite up 0.4%. European futures. Here's what's in store for the European market open. We are looking at green across the board. So decent start to trade indicated at this early hour. Karen?
Meantime, the EU has downgraded its forecast for growth in the bloc this year, citing tariffs and unpredictability caused by the Trump administration. According to the latest spring forecast, real GDP growth is now expected to come in at 1.1%, while the euro area is expected to post a 0.9% growth, broadly in line with last year. However, the Commission expects growth to rebound next year, boosted by stronger consumption and wider investment. The EU Commissioner for Economy, Valdis Dombrovskis, noted there was a risk of inflation spiking again in the Eurozone.
Trade tensions between the US and the EU and the US and China could depress GDP growth and rekindle inflationary pressures. On the upside, a further de-escalation of EU-US trade tensions or a faster expansion of EU trade, including through new free trade agreements, could help sustain EU growth. Increased defence spending could also contribute positively to growth as a secondary benefit to the primary goal of enhancing the EU's security.
Well, what does tap the brake mean? Tap the brake. I think gets pulled back a little bit. You hear what I'm saying here. A senior JP Morgan executive says investment banking clients have, quote, tapped the brake amid market volatility, with fees set to fall a greater than expected mid-teens percentage for the second quarter. Now, CEO Jamie Dimon also sounded a cautious note on the health of the US economy at the bank's Investor Day, saying credit is a bad risk. Really? I didn't think the credit levels were in the recent set of numbers were that bad. Okay, it says credit is a bad risk, that American asset prices remain high, and warning of the potential impact of tariffs. Well, let's listen to what Dimon actually said.
My own view is where people feel pretty good because you haven't seen an effect of tariffs. The market came down 10%, it's back up 10%. I think that's an extraordinary amount of complacency. That's my own view. That when I've seen all these things adding up that are on the fringes of extreme kind of thing, I don't think we could predict the outcome, and I think the chance of inflation going up and stagflation is a little bit higher than other people think.
He's right, isn't he? I mean, he's very often right, but he often warns of stuff that doesn't happen to the downside. That's his job as the boss of one of the most important systemic banks on the planet. But he's right. We went down more than 10%. We're back up there. And it's almost as if nothing happened. But there's the ramifications, as you've been saying actually quite a lot as well, they are there.
You feel the scars because the volatility has impacted the investment decisions, right? That's one area where you've seen people holding off in some areas on the sidelines, waiting for some of the noise to evaporate. That said, there are other pockets, and to the point here about just how immune people have been. I was talking to someone on the weekend about what the big money was doing, and the reality was it was sitting back doing nothing. It was watching all the volatility, was tempted to sell, didn't. Perhaps moved in to nibble when it was at a low on the market, but by and large didn't do a lot with the portfolio. So to the point...
It was 1-0 to the retail. Hedge funds lost.
Yeah.
Big money, nothing. It's washed it. Retail nailed it, which is very rare.
Well, I think the retail investor in the U.S. is a huge part of the market and something that we don't have as much retail participation in Europe. So a lot of these trends that we talk about are U.S. trends. Steve, you kind of you picked up on the investment banker there saying that companies are tapping the brake, and it's a nuanced point, I think, that actually is pretty reflective of how companies are feeling right now. They're not slamming the brake, they're not even hitting the brake, they're just tapping it, going a little bit more cautiously, a little bit more slowly, putting the pause on their investment plans, but we're not seeing major rethinking at the moment. And I think that just speaks to the amount of uncertainty that's out there.
The biggest investment story out there, arguably, would be Apple India, which we've digested 100 different ways. But we also digested in the way as, well, long before Trump said anything, was, well, what if Trump then turns his eye on India? And lo and behold, he turns his eye on India. So there's the brilliant, perfect, encapsulating example of a massive American company that wants to spend a massive amount of money, but now it's like, oh, what do we do now? Because we don't know if Trump's going to turn on India as well.
You look at Apple shares, and what was perhaps most extraordinary is that investors didn't react to Trump coming out and saying, hey, look, Tim Cook, you can't invest
Did they
in
not?
Apple.
I didn't look.
No, Apple shares didn't really do much on that. And that just says that investors believe a solution is coming, whether that be Trump allows them to continue manufacturing in China or comes up with another solution. But that doesn't tell me that investors think Apple's going to start making expensive iPhones in the US.
But to your point, tapping the brake, when do you use it? You use it on the highway. So typically you're on motorway, you're going at high speed, you see something ahead of you, and you start tapping the brake.
I've seen the way you drive. I reckon you do it on Chelsea High Street.
Well, you don't slam on the brake unless you really have to. You tap on that brake, trying to take a little bit of speed off just in case. But the reality is things can stop very abruptly ahead of you, and then it's a car crash. It's a multi-car pile-up, isn't it? So I think this is what the market's been looking at. Are we going into some sort of car crash scenario, a recession?
Wow,
Can we avoid it?
You really took it to another level there, didn't you?
But
Tapping on the brake,
is, right?
generally in traffic, and you're just going, car crash. Wow, Karen. You went there.
No, I'm a real brake tapper, so maybe this resonates, this analogy.
I'm terrified of driving with either of you at this point. I'm just like a slow guy.
No, that's a brake tapper.
Not a slow guy. I've seen you in that car park many years ago.
Moving on.
All right, U.S. President Donald Trump is reportedly set to attend today's House Republican conference meeting in person as he looks to unify the GOP behind a massive bill which would advance his agenda. The legislation, dubbed the One Big Beautiful Bill, advanced from the House Budget Committee but still faces disagreements within the Republican caucus.